Hello everyone, welcome to Capital Call, a special podcast series where we speak to venture capital investors to try and understand how they and their portfolio companies are handling the COVID-19 crisis. I'm Binu Paul, and today we have with us Parag Dhol, Managing Director of Inventus Capital Partners. Welcome Parag.
Hi, you are part of one of the oldest VC firms in India. You have seen the volatility of private capital markets in India, the different phases it has gone through. So how different is the current COVID-19 crisis and its impact on our startup ecosystem in comparison to some of the earlier hostile situations we had?
So, Bino, yes, have been around as a VC for long, and most of us have been at Inventus India as well, and seen many crises. But this one is quite different in the sense that what we have seen so far have been economic crises. This time around, it's a health, social crisis as well. Never has a train has gone off the tracks because of an economic crisis. This time around, we put it on a siding, isn't it? And decided to shut down the economy. That's not something any of us have seen before. What happens to a company or to behavior when actually you shut down operations for 2, 3, 4, whatever months it takes is just so unpredictable and so difficult for anybody to forecast that this is unprecedented. It's a very difficult one.
So I'm sure you're looking at taking a closer look at your own portfolio companies and other startups in the market. So how badly are they affected by this pandemic of massive proportion, and how are they responding to the crisis?
So I think everybody is affected for sure because either the demand side has gone off, or the supply has been affected, or the operations have been affected. Everybody, and let us take a travel-related company like a Move in Sync or a Savari. Obviously, they have been very badly affected. So
Yes.
The effect in some others like a POLICYBAZAAR or Funds India, Healthify.me is lower. Maybe in the case of Healthify.me, it's probably even better off because of the product they had, which was in the nature of a digital product. So everybody, the levels of impact are different. Mm-hmm. But the good thing is, I think, as I didn't realize this till somebody in our peer group, somebody who heads an accelerator here told me this, that everybody, even before we spoke with them very early in the crisis, let us say late March, almost everybody had a plan. They had recognized the seriousness of this thing way back then and had a plan, had the outline of a plan. Nobody knew how bad it was going to be even then, but had the outline of a plan. So that maturity was very, very good to see amongst all the entrepreneurs that we have.
Now that we are a couple of months into the crisis, how well are they been able to implement those initial plans and then adapt to the changing times?
Times are changing on a 15-day monthly basis as they're back from the market, what you can do, what you can't, depending on containment zones, red zones, whatever be the case, or what is happening internationally as well in some cases. So it's not as if there was one operating plan discussed in the end of March and that is going to stay. Everybody is kind of finding their way, finding innovative ways to keep the revenues going. Some of them are using the downtime that they have to improve the product, focus on the technology, etc., at a lower scale, given that the operations and the pull from the market is not that much. They are focusing on that bit. So everybody is kind of is moving on a, I would say, a weekly, fortnightly basis and changing plans accordingly. So one of our companies, for example, has a scenario. One of their divisions was very badly affected. Has 3 scenarios. One, the slope of coming back. It has gone down to almost zero. So how does it come back in terms of the slope of it coming back? Does it come back to the same level as March? Everybody is kind of adjusting, but is being innovative about doing things, and are implementing tough, harsh measures inside to ensure survival as well. That is important.
Great. So from your experience of working with startups over the years, what are the parameters you rely on identifying weak links in your portfolio, during times like this?
So during times like these, you first thing, the mettle of an entrepreneur is tested. How well he or she responds to the crisis. 18 months is going to be very hard to raise money. So what do you do next? Cost is the only thing you can control. Revenues you can't. So you attack costs. Which level do you attack at? Do you kill all the experiments you have? All of those things are getting reviewed and decided on an ongoing basis. Unfortunately, some of these companies will not see the light of the day, isn't it? This is a substantial blow to their operations, etc., etc. So try and find, if there were some existing dialogues for M&A or whatever, to try and find a home for them.
Yes.
Clearly, discussions around bridge funding, etc., happen in almost every company, in many companies, not every company. Some of them are well capitalized. But some of these discussions happen. Some of these companies where we were probably, let's say in early March, we were sitting at the fence. We were like, okay, this company is not going places, but we'll give them a shot for some more time. If that was the outlook now, that was the outlook then, I should say. Today, that outlook might be slightly more, I would say, clinical. People will be, I think it is, having said that, it is unfair to cut a guy off his oxygen just because the external environment changed so drastically. So if there is a ray of hope in the business, we will definitely fund it on an ongoing basis. But unfortunately, the situation is such that you will have to be clinical in a few instances. Yes.
This pandemic-induced situation is creating a massive shift in consumer behavior, while also impacting the size and pace of venture capital investing and startup valuations, at least momentarily. So are there any significant changes you observe in the VC investment patterns? Or in the aftermath of this crisis, do you expect venture capital ecosystem to evolve or change from what it used to be?
So, the way I look at it is that I'll break the timeline into three parts. One was the timeline coming into, let us say, September 2019. September 2019 is when the WeWork fiasco happened, isn't it? So yes. Till September 2019, the ecosystem was gung-ho. Some people were raising money every 3 months, $100 million round, $50 million rounds, all over. From September 2019, the talk of unit profitability, unit level profitability, came into being, in the sense that that was one thing that started getting discussed in boardrooms and amongst VCs, peer VC conversations, etc., because that was a huge blow for sure. Yeah. And then this happened. In my mind, this now becomes a survival. This is going to be difficult. I think of all the crises that I would say I have seen or I've read of, this would probably resemble the Great Depression the most. I think the economies, etc., are much better placed not to let it go that bad, but nevertheless, I think this will be as bad as any of those guys. Is what my current feeling is. So to that extent, I think we need to be prepared. We need to be prepared for very tough times. The valuations will clearly adjust. Yes. I mean, I'm surprised that the stock market has held up to an extent, but let us see. I think the clock has moved. The driver has moved towards capital efficiency. So I'm still seeing a lot of activity in the early stages. Companies we are given to still saw a lot of interest from other people when they went around looking for some additional capital to kind of SAAS during this crisis, and they saw a lot of interest. So that was good to see. But I suspect the highly valued companies which were losing tons of money and which have been affected by this crisis, probably a good time to be small now rather than big, because you don't. The inertia of being big, bringing it down is very hard. Newton's law says so. And second thing, I think smaller companies have a higher chance of getting funding at this point in time because they have no history behind them. Is going to come back soon.
Startups are settling for bridge rounds to tide over this crisis right now. So are you seeing similar trend among your portfolio? And what's your message for startups out there trying to raise survival money at this point in time?
Okay, so this is what we have been telling our companies for a while, that do not assume that a round will come externally in the next 12 to 18 months. Okay. Definitely not from people you don't know from the past, in the sense that if somebody is tracking you because you were a pre-Series A company or a Series A company and a Series B investor has been tracking you, then by all means try and speak with him or her. But otherwise, getting a deal done is going to be very tough. Now you have only two sources of capital, if you will, which is to cut down your burn, number one, and number two, raise bridge financing. So those were the discussions that happened in the first 15, 20 days of the crisis, isn't it? So some of them asked for money, and there was a to and fro as to how much they should get, and interaction amongst the various investors if there were more than one investor, which is very often the case. So all of those discussions have happened, and we have taken those decisions and have agreed on milestones that we will try and achieve against those bridge rounds, either make the company profitable or take it to a place where 12 to 18 months later it will be fundable, as the case may be. You kind of have thrashed it out. So that's my message. Do not expect external financing from people you don't know from the past. It is that is a low probability event. I won't say it won't happen, but it is a low probability event. So the two sources that you have is conserve your own cash, and second, bridge financing from your existing investors.
Coming to your own investment strategies, is there some form of changes or modification in the way you look at investment opportunities or the core segments you focus, given the current scenario?
So, what I would say is, I think this is an evolving scenario. As I said in my preamble itself, it is not something any of us have seen before. So when we actually come out at the end of it, what happens to, let us say, just to take an example, a Book My Show, which when do we go back to cinemas, which is discretionary expense and involves some risk, quite some risk. Sitting next to a stranger for 3 hours is not something that any of us will do anytime soon, isn't it? So all of those behavior changes will impact different businesses differently. Some of them will be evolutionary changes. Some of them will be revolutionary changes. So to that extent, I think it is too early for us to say that, see, the obvious ones like e-learning is benefiting, etc. is fine. But does that continue after life returns to normal? Does life return to normal in the first place? At least in the medium term, even there is no answer. So to that extent, I don't think we have enough information or enough foresight to look into the future and say things have changed, or this particular industry is this way, etc., and we are changing our investment strategy accordingly. No, I don't think we are going to do that. Our business is to fund entrepreneurs at an early stage and stay with them for 6, 7, 8 years as they build out the company. So our call is mostly about the entrepreneurs and a bit about the market. So I think when you define your objectives, your goals that way, then you don't cut out the market, but you kind of, the impact of the market segment is not as high in decision making as some of the others, I would say.
Got it. Got it. So, from a fund deployment point of view, finally, are you taking a cautious approach during this time, or is it business as usual for Inventus?
As I said, we are 6-7 years kind of holders of private investments. So, to that extent, I think as of now we are holding on, business as usual. We were never very prolific. Our pace is 3 to 4 every year, and we intend to maintain that pace.
Thank you, Parag, for taking the time out to talk to us. That's the end of this edition. Thank you all for listening, and tune in next week for another episode of TechCircle Capital Call podcast. Stay safe.